welcome to International Hawaii. I'm your host, Cindy Matsuki. International Hawaii showcases local import-export businesses and support services to help others new to the industry. Today, my guest is Greg Moore, Regional Manager at the Export-Import Bank of the U.S. Thanks, Greg. Hi, thanks so
Hi,
much for
Cindy.
joining me.
Hey, thanks for having me. I really appreciate it. I just want you to know I'm wearing my favorite Hawaiian shirt in Europe.
Yay, that's
That
great.
was just in Honolulu during a business trip out to Hawaii. And
Yes,
the manufacturer of the shirt happens to have been a customer of ours as well.
that's great. Maybe you can tell us about that story in a little bit. I will ask you. So maybe to start off, could you briefly explain what EXIM Bank is? And is it a government agency or it's actually like a corporation?
No, it's an independent government, federal government agency based in D.C. I say independent because our annual operations are not generally funded by the U.S. taxpayer, as is the case with most government agencies. We fund our own operations by charging premiums for export insurance policies and loan guarantees for things like working capital lines of credit and buyer loans. Through those services, we generate fees, which fund our operations. EXIM was founded back in 1934 by FDR during the Great Depression. And he wanted to help the economy by advancing U.S. exports and creating and sustaining American jobs through generating more export sales. And that's been our mission the entire time. Although we have the word bank in our name, as in Export-Import Bank, I frankly think of us more or less as an insurance carrier. Because 99%, we do make direct loans from time to time, but usually in the context of huge project financing, so maybe even several $100 million.
Wow.
And I can explain what project financing means as opposed to trade financing. But most of what we do is with respect to trade financing, where there's a buyer and a seller. And what we do is help the U.S. seller close deals with overseas buyers.
Oh.
Does that help? Or should I go into more detail at this stage?
No, that makes sense. So you help them. So say there's a Hawaii company that wants to export. You help them negotiate a deal, or you help them, like, how do you help them with their deal?
Okay, well, I did a little research on what we've been doing in Hawaii in anticipation of this call. We have several programs that are beneficial to exporters, but our Hawaiian customers have exclusively been using something called export credit insurance, or sometimes referred to as trade insurance. And that's when, say you're an exporter and you're relatively new to exporting, right? But you're negotiating a deal, a sale, with a new distributor, I don't care where, let's say Hong Kong, okay?
Okay.
And the prospect in Hong Kong is saying, okay, for the first few transactions, I'll pay you in advance as you've requested. You, the seller in Hawaii, want in advance.
Yes.
What I say to that, incidentally, is get cash in advance all day long. Right? Cash is king, as long as you're not hurting your sales that way. Because the buyer in Hong Kong rather, might come back to you and say, you know what, we've got a supplier of a product similar to yours over in Germany, and they're offering us 60-day payment terms, and you want cash in advance. I think I'll go with a supplier in Germany that's offering us payment flexibility. We can more closely align the time that we receive payment from our customer in Hong Kong with the time we have to pay our supplier. And that's when we step in, because the exporter in Hawaii can say, well, if I can insure this sale against payment default, because that's the risk, right?
Yeah.
Buyer in Hong Kong is saying, ship to me, I'm taking title and possession of your product, service, whichever it is, right? Before I pay you. So all of the risk is with the seller, not the buyer. And so the seller in Hawaii should do several things. They should first evaluate the creditworthiness of their buyer in Hong Kong. They can do that by asking the buyer for a couple of third-party trade references. They can do that by ordering a credit report from one of the international credit bureaus. And I have a list of EXIM approved credit bureaus. Depending on the amount of the sale, if it's for a really large dollar amount, they can ask their buyer for financial statements. They may or may not. But there are a number of tools out there that they can use to evaluate the creditworthiness of the buyer before agreeing to take the payment risk of to them on open account payment terms, i.e., shipping before you get paid, right? Does that all make sense? So, additionally, so people should always evaluate the creditworthiness of their buyer before extending payment terms. But another thing they can do is insure that sale with us against payment default. So if it turns out that they ship, say on 90-day terms, whatever, and the buyer in Hong Kong defaults on payment, they don't pay, they disappear. And your friend in Hawaii, the exporter, is emailing them every day, calling them every day. They can't locate them.
Yeah, no response.
And they have their goods. And I'm not picking on Hong Kong, incidentally. South Africa or England, I don't care where it is. I said Hong Kong arbitrarily because I think that's a big market for you guys. Why? For us, I should say for us. And so they can file a claim with us, typically for 95 or 90% of what the buyer at Hong Kong owes them.
Wow.
Will pay under that claim. What does that do? It does a couple of three things for the exporter in Hawaii. First, they're obviously greatly mitigating their payment risk because they're transferring 95% of it over to us in effect, by being able to file a claim in the event of a payment default. Okay? So it's a risk mitigation tool. First, that's first. Number two, it's a great sales tool. Say the whole buyer in Hong Kong is actually pretty strong, and say they're a distributor or a retailer, which makes them a recurring buyer. Potentially come back every quarter or even every month and restock inventory from you, the export, right? So you want to encourage them to do that. You want to encourage them to stock as much of your inventory, as much of your goods as possible. Transfer your inventory costs over to them, right? And so offering payment flexibility is a great sales tool. In all likelihood, that buyer is going to buy more from you if you can, or when you can. And third, people listening to this are going to think automatically, well, and they should think automatically, well, that's all fine and dandy. But if I'm offering 90-day terms and then I file a claim with you and then I have to wait for that payment, which is probably going to be like the overall process is probably going to be 120 to 150 days until I get paid. How do I keep the lights on around? How do I pay my rent? How do I pay my people, etc.? Well, you need to make sure you have access to working capital. Okay. And that's another thing that we facilitate. We guarantee working capital lines of credit that bank lenders make to exporters specifically for the purpose of financing export sales. And that can be in the form of financing purchase or procurement or production of inventory from the very inception of the transaction. Say you, the exporter, get an order,
Mhm.
and now you're saying, okay, I'm a wholesaler, I've got to buy this product from somebody else, or I'm an assembler, I've got to buy various
Mhm.
supplies and assemble it before I ship it, but I need money to do that to begin.
Mhm.
And now this guy in Hong Kong is asking for 90-day terms.
Yeah.
I've done my evaluation. He's a good buyer,
Mhm.
just the way he does business, right? A lot of
Mhm.
business that way. You want
Hmm.
my business, extend payment terms. Okay. And so how do I do that from a cash flow standpoint?
Yeah.
I'm a tiny company.
Mhm.
I've got 3 workers here. You
Yeah,
know,
exactly.
how am I supposed to do that? And so, you know, you want to make sure you've got a credit line in place that you can draw down on and pay back when the buyer pays you,
Oh,
like a credit
interesting.
card, or, you know, that's how a line of credit works. You draw on it when
Interesting.
you have to borrow to finance something, and then you pay it back down once you get paid by your customer, right? And so banks will typically say, wait a second, in the case of export sales, the inventory we're financing is heading overseas.
Mhm.
The receivables we're funding as well, which is to say, you know, they're not getting paid cash in advance. So the exporter is generating accounts receivable. That needs to be funded as well until they get their cash, right? And the bank is saying, well, those are foreign receivables. So we have no access to our collateral.
Yep.
So we're
Yep.
not going to do this line of credit.
Yeah.
Banks, they want their collateral. So
Yep.
if something, heaven forbid, goes wrong and the borrower, the exporter, can't pay them, they want to have something they can grab onto
Mhm. Yep.
to get their money back.
They need some
But
assets.
frequently they'll say, no, we don't want to do that because all of our collateral is overseas.
Mhm.
So that's where a government guarantee, such as from the EXIM Bank, or it could be from the SBA, is very helpful because that will frequently change the
Oh.
mind of the bank. They'll say, okay, with this 90% flat out guarantee that if something goes wrong, I, the bank, as the insured party, can
I see.
file a claim with the Export Import Bank, right?
Got it.
Go ahead and I'll do the line of credit. So we work with international banks all over the country that have our so-called delegated lending authority. They can make underwriting decisions about their borrowers, their exporters who need to borrow funds to finance export sales, and do it without us looking too much over their shoulder and still benefiting from that 90% guarantee that we provide them with. Does that make sense?
Yeah. So the lines of credit actually coming from banks, not from EXIM
Right.
Bank.
Good
Got
point.
it.
We're not the lender.
Got it.
Bank is the lender. We are simply, remember I said we're more, I think of us more as an
An
insurance
insurance company. Yeah.
bank, and that case comes in point. So what will frequently
Interesting.
happen is that we'll have an export credit insurance policy set up for an exporter to protect their open account sales, in which case, again, the exporter is the insured party. And we'll have that policy running concurrently with a working capital guarantee where they're also financing their export sales by drawing on a line of credit provided by a bank lender, also under an EXIM insurance policy.
Mm-hmm. Mm-hmm.
And so those 2 insurance policies, one for the exporter, one for the
One for
lender,
the bank.
are running at the same time. Okay. So that, first of all, the exporter can file a claim with us in the event of a payment default. But that claim payment can be assigned to a lender that's providing them with working capital. So if there's a payment default and the exporter files a claim with the EXIM Bank, that claim payment could go directly into an account controlled by the lender. Does that
Got
make
it.
sense?
Got it. And this is,
Confusing.
these policies, are they per transaction? Or are they
No,
rolling?
yeah, they are. Again, I started out by saying that we're quite transactional
Mhm.
in our orientation. So there's not much, technically they're per transaction, yes. But lines of credit can be set up and are generally set up to finance multiple transactions.
Mhm, mhm, mhm.
And similarly, with the export credit insurance policy, the exporter can take out something called a multi-buyer policy, whereby they're
Okay.
insuring multiple buyers under this
Mhm,
policy. Now, they're either insuring separate transactions.
mhm. Yeah,
They can be doing multiple transactions at the same time
and
under
covered by that one policy.
under one policy or under one line of credit. That's right.
Hmm, that's great.
Um, the shirt I'm wearing, now I don't think these guys, and I can't name them for you. I can't disclose who someone is. I don't think they're any longer an EXIM Bank customer. I'm not
Mhm.
sure, but at one time they had an export credit insurance policy with us where they were protecting payments on exports. Our active accounts right now in Hawaii are agricultural exporters by and large,
Hmm.
particularly papaya. Papaya is big in
Yeah.
a beautiful state, and
Mhm.
and Hong Kong and Canada are the most common markets for papaya exporters out of Hawaii.
Huh.
A lot of potential markets. When I was there calling on companies, um, one of the things they all told me was that because of fruit flies, a lot of
Mhm.
markets were closed to Hawaiian papaya.
Mm.
Evidently, Canada and Hong Kong have no such restriction. And so that tends to be a big market. And so the people that we're supporting and the companies rather that we're supporting in Hawaii are benefiting from that export credit insurance program that I was
Hmm.
telling you about. They're policyholders, basically. Our largest papaya exporter customer is using the policy to fund around $200,000 in monthly sales. And it's a $350,000 policy, I believe, whereby they can insure up to $350,000 at any one time.
Wow.
Right? But in terms of aggregate sales, it's insuring around $200,000 in aggregate sales every month.
Wow. Every month.
So yeah, so it's very, and they've been a longstanding customer. It's very helpful to them and to others that do similar things there in Hawaii.
Wow. How is, I don't know if you can tell me, like, if it depends on how much you're insuring for, but is it like, how costly is it to get
Well, that's a
insurance?
good, obvious question. Thank you. I may have, oh, does it cost something? Yes, it does, unfortunately. So the costs vary depending on a couple of things. What type of policy the exporter might take out. We have 4 different types of export credit insurance policies, all right? One is a single buyer policy, whereby we're insuring only one buyer under the,
Mhm.
but the exporter can take out as many single buyer policies as they want. Um, that's our most expensive policy.
Mm.
And I can't quote you a blanket rate because for the single buyer policy, it's always going to depend on the country the buyer resides in and the payment terms. The longer the payment,
Mm.
riskier the transaction. And as a result, the more expensive the premium for insuring the transaction becomes,
Interesting.
right? So
Huh.
just off the top of my head, for example, let's say you're extending, you the exporter, are extending 60-day payment terms to
Mm-hmm.
a buyer. If that buyer happens to be in Canada or an OECD country or Japan, those countries, that's where the lowest premium rates are available, because those, from a country risk point of view, of economists back in
They're
DC
low risk.
that evaluate country risk on an ongoing basis. So for a sale with 60-day payment terms to an OECD country, the premium rate, I think right now is around 50. It's not around, it is 56 basis points, better known as approximately 0.5% of the payment risk.
Huh.
Let's say it's a $10,000 invoice and the entire invoice is on open account. In other words, there's no down payment involved. Okay. So you would take $10,000, or 10,000, multiplied by 0.0056 equals the amount of premium the exporter has to pay EXIM Bank after they ship, and only after they ship. 10,000 times 0.0056 equals $56. That's what they owe the EXIM Bank for transferring $9,500 of the payment risk on a $10,000 invoice. Recall, we protect 95% of the invoice.
That's amazing.
Which means the exporter is still on the hook for 5%, right? They're transferring 95% of the risk for $56 if it's a $10,000 invoice. So
that seems reasonable.
If it's a $100,000 invoice, 100,000 times 0.0056 equals $560, and so on and so forth.
I think that's great.
Dollar amount of the payment risk multiplied by the premium rate. Now, something I want to point out is and I don't want to get. I'm here to consult with people, and what I'm about to say might sound like I'm trying to sell you something. I'm not, but I am trying to be beneficial in presenting our programs. Let me back up. I want to make sure that people understand that if they're new to exporting and new to a particular buyer, unless they can establish that that buyer is highly creditworthy, they should not start out by selling on open account payment terms, with or without the insurance, because we're strictly the backup. You can file a claim with us for payment if the buyer fails to pay you, but the buyer is always going to be your primary source,
yeah.
not the insurance carrier, right? So try and get cash in advance if you can first, for at least the first 2 or 3 sales that that buyer. If the size of the transaction justifies something called a letter of credit. I don't know if you're familiar with letters of credit. It's not a service EXIM Bank provides. It's something a commercial bank would do. All right. Say it's a $500,000. Well, let's say it's a $100,000 sale. That might justify a letter of credit. That becomes a bank-to-bank transaction where the bank of the buyer issues something called a letter of credit in favor of the seller in Hawaii. And when the seller presents the buyer's bank, say in Hong Kong, with certain collection documents evidencing that the shipment has taken place, and those collection documents include things like a hard copy of the International Bill of Lading, the commercial invoice that the exporter has issued to the buyer, the purchase order that the buyer has issued to the seller, possibly a certificate of origin, depending on the requirements of the importing country, possibly a packing list. Okay. Once those collection documents are presented to the buyer's bank, then the buyer's bank, under the letter of credit, is legally obligated to make payment to the seller.
Oh, interesting.
Now, that's not an EXIM Bank service. That's more Bank of Hawaii service.
Like a commercial bank.
Okay, let's say HSBC is the bank in Hong Kong, the buyer's bank, and they issue a letter of credit in favor of the exporter in Hawaii.
Mm-hmm.
That's a pretty solid letter of credit from a major multinational bank.
Mm-hmm.
The exporter in Hawaii should still try and get that letter of credit confirmed with a local bank, with a US bank in any event, so that the only credit risk they're assuming is that of the local bank.
Mm.
Something goes wrong. See, the
Mm-hmm.
credit risk under a letter of credit is if the bank issuing the letter of credit becomes insolvent.
Mm-hmm.
So
Got it.
an HSBC issued letter of credit may or may not require confirmation on the part of the local seller, right? But let's say the buyer is in Senegal or Chad.
Yeah.
Have their bank issue a letter of credit, or it could be Vietnam or Cambodia. And they have their bank issue a letter of credit. Maybe that bank isn't so solid internationally.
Yeah. Yeah.
Maybe there's actually a genuine payment risk there. So they're always going to want to get that payment, that letter of credit rather, confirmed by a local bank, right?
Got it.
Right. Now, here's the problem with both cash in advance and letters of credit. Get that if you can, if you're the seller, right? Don't do business with a buyer if you haven't established they're highly creditworthy and they're demanding open account payment terms starting off with. That's smelly to begin with, you know? You've never done business with someone and they're saying, give me 90 days credit.
Yeah.
Come back to them and say, give me a 50% down payment and I'll give you 60-day payment terms.
Mm-hmm. Yeah. So you can negotiate.
That's a nice way of transitioning from cash in advance or letters of credit or cash against documents for that
Mm-hmm.
to open account and ensuring open account sales. You might consider negotiating a down payment to transition into open account.
Got it.
Now, I said that prefacing something else, which I can't remember right now, and I don't know. I don't know how I'm doing on time.
Yeah, you have so much information. I feel like we need to do another show because I have so many more questions, but we're almost out of time.
Okay. We have
But I
time
think
for one more question.
that was really interesting. I think we're gonna try and wrap it up, but maybe let people know how they can get in touch with you or how do they find more information out about EXIM Bank?
Yeah, thank you. So we're at exim.gov. All right. My name is Greg Moore, and my number here in California is 562-213-2529. And I want to say one last thing if I have 30 seconds.
Sure.
And that is that if you are unable, if you've been in business a little while and you think your financial statements will support it, but you're unable to locate a bank willing to finance export sales, you can contact me about that. And EXIM Bank will endeavor to set you up with one of our delegated authority lenders. And we'll have the lender contact you. Now, keep in mind, as you asked before and I answered, we're not the lender.
Mm-hmm.
So lenders are going to want the same information lenders always want.
Mm-hmm.
Want to see audited financial statements, copies of corporate tax.
All your ducks in a row.
Right? But we're simply backing up an export loan that they otherwise might not do. So if anyone listening to this is having that problem, you can call me, 562-213-2529, and I'll try and help you with that. Okay?
That's wonderful.
You can call me directly if you're interested in applying for this export credit insurance that I've been talking about as well. That
was so great. That's an amazing service. And I think more people need to know about this. So I'm going to share this as much as I can.
Yeah, I don't think enough people in Hawaii know about it.
Yeah.
I
think it's very useful.
And I just want to remind folks, and we were talking about this before the recording started, You have a fellow with the U.S. Foreign Commercial Service in Honolulu.
Mhm.
His name is John Holman. And so if what you're trying to do is locate overseas buyers, right?
Mhm.
It's not something we do, but that's something they do. They
Yeah.
have a variety of services to help exporters find foreign buyers.
Yeah.
That would be your first step. Okay.
Perfect. And I also wanted to remind our viewers out there that you have another workshop coming up with High Step, and it's on March 16th. So if you want to join that workshop and learn more from Greg, it's at invest.hawaii.gov, and you can register to attend that workshop as well. And that's all about export financing too.
Okay, so I'll be repeating myself for that one. That's fine with me.
But yeah, I really appreciate it. And I think I do want to have you on again, if that's okay, because I didn't get to ask all my questions, but
Okay, no, I'd love to.
great.
Cindy, I'd love to do that.
Great. Greg, thank you so much for joining me on International Hawaii on ThinkTech. So we'll see you around next time.
Okay, thanks, Cindy, and bye-bye. And
Thanks.
mahalo, and guys, give me a reason to come back to Hawaii, please. I need to come
I
back
will.
to Hawaii someday. It's so beautiful. All right, thank you.